Okay, so in today's class, we will talk about an order block. Okay, so what is an order block? Order block is basically the loss in theory. It is called as the loss selling or the buying candle before a strong move. Okay, so let me just give you about that theory. Okay, so this is, like, assume that this is the bearish candle. So it is the loss selling or buying candle before the strong move of the market. Okay, so this area often contains the orders, okay, the pending orders, and you can also call this as the order block, as the supply and demand zone. Okay, so which one is the last selling candle here according to the theory? If we see here, so say suppose, yeah, this is the bearish candle, let us say. So this is also the bearish candle. Okay, so the last selling candle is here before a strong move from the buyers. Okay, so this we can take this candle as an order block. Okay, so basically see this before this strong move, the last selling candle, this last selling candle is the order block. Okay, call this as the order block, but we also have to and also this, not all order blocks are reliable, so some order blocks are smart money trap, so we have to know about that as well. And then, so we will also talk about how to identify the high probability order block. Okay, so to identify a high probability order block, there must be a pullback. Okay, there must be a pullback, which means the inducement, okay, must be present in the structure before the order block, and then there should be a gap. Okay, there should be a gap. Okay, there should be a gap, so it can be any type of gap, doesn't matter. And then our order block candle should also be the major candle. Should be the major candle. Okay, should be the major candle. Okay, so here, so the order block candle should be a major candle, and then it should have swept the liquidity. Okay, so here, if we look at here, this particular candle has been break, and then the liquidity from this candle has been shifted to this particular candle, so this has become our major candle. Okay, so there should be the liquidity swept, and then it should be the major candle, so we can take this as the order block. Okay, just according to the theory, the last selling candle before the big buying move. Okay, so this is an order block. So why are order block important is that because there is a pending order. Okay, there is a pending order, the pending order in this area. So when the market reverses to this order block, then the market can also reverse from this order block as well. Okay, so that's why this is called as an order block. So this can, like I have said, this can also act as the strong supply and demand zone. Okay, which can hold the market. And then also, to identify a good order block, like we have mentioned here, there should be an inducement, and there should be a gap, and then the major candle. Okay, so the order block candle should be a major candle. So this is the one scenario of the order block, how you can find the order block. And then I will also give you another example where you can also find an order block in this kind of situation. Okay, so let me just give this as the bearish candle. Okay, so here, okay, so here, okay, so okay, the candle moving this way. Okay, so this should be the bullish candle, okay. And then, okay, so there is a gap here. Okay, so okay, so here, okay, let's just give some weak call as well for the candle. Okay, so here, if we look at here, so which candle should we take as the order block? If you look at this here, okay, so according to what the theory, this you can take this, the whole red candle, as the order block. You can also take this, okay, as the order block, okay. But however, this may be less effective, okay, because, okay, this may be less effective, okay, since if you look at the gap here, because see there is the gap here, so, okay, so if we take the order block below the gap, that is more effective, okay. So there is a gap here, and then also this particular green candle have swept the previous candle liquidity, which means the liquidity has transferred to this candle, and then this particular green candle has become our major candle now. So it is better to consider the major candle as the order block in this type of scenario, okay. So it's just simple, just take your order block below the gaps, okay. So it can be fair value gap or whatever gap it is. So in this type of scenario, if you take this, the whole green candle as your order block, this whole green candle as your order block, this will be more effective rather than taking an order block from this bearish candle, okay. So this is the one type of scenario that you can find, okay. And then there will be also another type of order block. So here, if we mark the bearish candle over here, okay, so let's assume that this is the bearish candle, okay. So let's just draw the candle over here, okay. So here, okay, and then another bullish candle here, another bullish candle here. So let's give this as the green color, and then we have the gap, okay. And then, okay, so there should be a gap, okay, there should be a gap in order to get a high probability order block. So let's just move it closer, okay, so like this, okay, like this. And then we can also give the width, okay. So you will find this kind of situation, okay, as well for the order block, okay. So here also, I hope the line is visible, this line, okay. So let me just make it black if it is not visible, okay. So okay, yeah. So in this type of situation, where should you take the order block, okay. So it is also fine if you take this the bearish candle as well, okay. But this one is less effective, this one is less effective, okay. It will be less effective because as part of the week, if you look at here, if this part of the week has already mitigated this order block, okay. So therefore taking this bearish candle will be less effective. So I would suggest in this type of situation, you consider taking the order block for from this green candle, okay. So this will be more effective, okay. This will be more effective for the order block because we also have the gap just above the order block, okay, just above the order block, okay. So it can be whatever type of gap it is. So taking this bullish candle as the order block will be more effective rather than taking the bearish candle, okay. So in practical way, you will find different types of scenario like this as an order block, okay. So the question here is whether you can consider taking an order block if there is no gap, okay. So in certain conditions it is a yes. So this is the bearish candle over here, and then we also have another bearish candle, the selling candle. If this is the bullish candle here, and then the bullish candle here, and then we also have the gap, okay. If there is no gap, I mean we don't have any gap here, for example. And this one we don't have the gap, okay. We don't have the gap here. So this one we don't have the gap over here, okay. So we don't have the gap, okay. So let me just make this as the green color, okay, green color candle, and then even this one as the bullish candle, okay, and then even this one as the bullish candle, okay. So in this type of situation, when you look at here, we don't have any gap, right? We don't have any gap. So in this type of situation, where should you take the order block, okay. So in this type of situation, if you have any long wick like this, okay, in this type of case, if there is no gap present, then if there is, okay, so if there is a long wick like this, then you can also treat that this as an order block, okay. So but then this wick should be relatively long. Okay, it should not be a short wick, like not be a short one. Okay, it should not be a short one, and then it should be relatively long, so that you can consider taking this as an order block. Okay, and then also if there is a swing, for suppose if there is a swing here and then it has swept. Okay, for suppose there's a swing here and then it has swept the liquidity, then this will be more stronger. Okay, so you can also consider taking this type as the order block, but then you also have to keep in mind that if there is mitigation of this order block. Okay, if there is mitigation of this order block, so once it is mitigated means you cannot consider taking this as an order block. Okay, so it should remain unmitigated so that you can consider taking order block. Okay, so another situation also that you will find. Okay, so and then this should be a bullish candle. Okay, this should be a bullish candle. So I will give you one more example where you can find an order block. Okay, so like this, so this is the bearish candle, over here. Okay, so here you have a wick like this, a pullback. Okay, a pullback like this. Okay, if there's a pullback like this, so if you look at the market here, the market went down here and then it went up and then it came down to this. Okay, to this level, so it has swept. Okay, so this should be this should be the pullback. If there is a pullback, it has swept. This particular candle has swept the major candle, low liquidity, which means that there is the value pullback here. Okay, so if there is a pullback here, consider taking this one as an order block. Okay, consider taking this one as an order block. Okay, so it should remain unmitigated. Okay, if it is mitigated already, then you cannot take. Okay, but if it is not mitigated, then you can consider taking this as an order block as well. Okay, so let me also just explain about the bearish order block. Okay, so here if we look at the candle here, so this is the last buying candle before this big selling move. Okay, so we can also consider this as we can also consider taking order block from this as the bullish candle as our order block. Okay, as our order block is we also have the gap over here. Okay, so it's just opposite of the bullish order block, and then here according to the what the theory say, that this bullish candle should be the order block, okay, but then to be more effective, we can take this bearish candle as an order block, because this has become our major candle, the liquidity has been shifted. Okay, so it will be more better if we take bearish candle this bearish candle as an order block. Okay, the major candle as the order block, as we also have the fair value gap. Okay, so it's better to take right above the fair value gap as the order block. Okay, and then so here if we if and then here also. Okay, yeah, okay, so in the bearish scenario, like we have discussed, we can also take this green candle as the order block, but then this part of the wick has already mitigated this part of the candle, so it will be less effective if we take this bullish candle as an order block. So it is generally better to take the bearish candle as our order block. Okay, to be work more effectively in this type of scenario. Okay, okay, and then also if there is no pullback like the bullish order block, if there I mean if there is no gap, then if there is a long type of wick like this, then you can also take this as an order block. Okay, but in a bearish scenario, it should be the bearish candle, and in an uptrend it should be the bullish candle, which means the candle should be in a green color. Okay, and then also if there is no gap, okay, we don't have any gap, but then if there is a pullback, like this, then you can also take this as the order block. Okay, but it should remain unmitigated. Okay, if it is mitigated, then we cannot consider taking this as an order block. Okay, because all this, okay, if it is mitigated, we cannot consider taking it as an order block, because it is for only one time use only. Okay, so this is about the order block. and then we can talk about the which order block will be the smart money trap and which will be the valid order block. And then yeah, so let's talk about that one. Let me just delete all this. Okay, so we can talk about which is the valid order block, which will be a good order block, which will be the smart money trap. Okay, so here the market is moving in an uptrend. Okay, now let's assume that the market is moving in an uptrend now. Okay, so it's going in an uptrend. Okay, so this is an uptrend market. So we have our high here. Okay, so this is the higher high. Okay, you can just start from here. This will be the high now. Okay, so this will be the high, and then this will be the higher high. Okay, so this is the higher high, this is the higher high. Okay, so these are the higher high. Okay, so we also have talked that we should take our order block below the inducement. Okay, in an uptrend, and in a downtrend it should be below the above the inducement. Okay, above the inducement. Okay, so we have our higher high here. Okay, this higher high. So our higher high confirm means we find our inducement, right? Like we have discussed. So this will be our inducement level. This will be our inducement level. Okay, so below the inducement. Okay, if you have any type of order block, then this first order block. Okay, this first order block will be our decisional order block. Okay, this will be our decisional order block, and this will be the valid order block. Okay, and then if you find an order block in the middle, okay, this order block that are found in the middle are smart money trap. This will be the SMT, smart money trap order block. Okay, this will be the SMT, this will be the SMT, and then the extreme order blocks. For suppose this is the extreme order block in this whole price range. Okay, this is the extreme order block in this whole price range, then this will be the valid order block. Okay, and then above the in and uptrend, just above this inducement, if you have any order block, this will also be considered as the smart money trap. Okay, so order block, it should be below the inducement, and then if you have the order block here, this first order block will be the decisional order block. This is the valid order block. The order blocks that are found in the middles are the smart money trap. Okay, SMT, and these are just to trap the traders. These are not valid order block. Okay, and then if there is the extreme order block, okay, this will be the valid order block. This will be our valid order block. Okay, okay, so this is about the valid and the invalid order block. And then so it's same to the bearish scenario as well. It's just the opposite of the uptrend, but I can also show you. Let me just erase these ones. Okay, okay, so in a downtrend it will be like this, it will be like this, the market moving in a downtrend. Okay, 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 so we have our lower low here. This will be the lower low, and this will be the lower low, this will be the lower low, and this will be the lower low, this will be the lower low. There is our lower low. Okay, so after we confirm our lower low means we get our inducement, right? So where will be the inducement? This will be the first pullback, will be our inducement, right? So this is the inducement. Okay, so just above the inducement, the first order block, if you have, okay, if this is the first order block, this order block will be the valid order block, and then the order block that is found in this, in the middle, okay, in the middle, will be considered as the smart money trap. These are smart money trap. the order block found in the middle. All these are smart money trap. Okay, so if you have an extreme in the price range, okay, so for suppose the price was moving like this, and then here this in this whole price range, this is the extreme one, then this extreme order block will be the valid order block. This will be the valid order block, and then the order block just found here, okay, this will be the, this order block will also be the smart money trap. Okay, so the decisional order block, first order block is valid, the extreme order block is valid. We can consider taking trade on this order block, okay, with the confirmation gap. Okay, but these are smart money trap SMT. Okay, so I hope you understand which one is a smart money trap, and which order block should you consider taking trade on, and then in what type of scenario you can identify the order block. Okay, if there is a gap, or if there is no gap. Okay, okay, so I can also give you the examples on the real chart about the order block. Let me just erase this one, and then I will show you on the real chart. Okay, so we will just look at the market, and then I'll just show you guys the order block. Okay, okay, maybe we can just start from this area because it's look kind of trendy. Okay, so maybe we can start from here by just drawing our level over here. Okay, this is break. Okay, okay, so this will be our higher high. So the higher high, so where is the pullback? This is the first pullback, which will be our inducement, so this will be also below the inducement, which is the first pullback. Okay, so we have the pullback here, we also have the pullback here. Okay, we have the pullback here, but this has already been mitigated, so this is invalid. We cannot consider taking this one. So below this, where is the first pullback? Okay, so we have the pullback here. If you look at the market was moving down here, and then it went up here, and then it went down, and then it went up, right? So we have discussed that even if there is no gap, if there is a long wick, then we can consider taking it as an order block. So okay, so here we have the pullback here, also we have the gap here. This is the breakable gap right here. We have the breakable gap here, so we can consider taking this green candle or the wick as the order block. Okay, we can consider taking this as the order decisional order block. Okay, so below the inducement, this is our first decisional order block. Okay, see, the market is mitigated our decisional order block, so this is the valid order block, and then after mitigating, the market is reversed from this level. So the external liquidity has been already mitigated, which means that the market will likely move to our next external target, which means after the mitigation of the inducement. Okay, wait, let me just select this one, and then so here is our inducement. Inducement has been mitigated, which means that this will be our break of structure, right? This will be our break of structure. So see, the external liquidity has been break, the market move up to our external target. Okay, so we will talk more about the external and internal liquidity as well, but okay, so these are all considered as the internal structure. Okay, okay, so this is about the order block. I think this will be enough, and I hope you understand what is an order block. Okay.